I'm gonna try my best to kind of guide you in a direction where you may be able to grasp it and understand. Okay. So page 29. So leasing. Quite often, a lease will have zero down, right? Zero security deposit, zero delivery charge, and it says 0%, zero first month lease payment. This particular offer, everything 000. So it's so appealing. Let's go for it, right? What is leasing? It's really a rental, a long-term rental. Okay, long-term rental. You are agreeing to make payments for a 2-year or a 3-year or whatever. Usually leases aren't that long. Like a 24-month lease is probably, right, maybe a 3-year, but then you return it. And so what's so appealing about leasing a car? The number one reason is because the monthly payments are a lot lower. Okay, that's the number one. If you look at this, what is this, a Santa Fe? If you would like to buy this one, like full on purchase it, your payments will probably be like $600, $700, $800 a month. Whereas if you lease it, it's $85 weekly, right? So most months have 4 payments then, right? 4 times 8, 4 times 9, let's say $360 a month, right? So it's a lot less. So that's the number one appeal. And so that's why leasing is popular. And a lot of businesses lease because they can write it off. Basically, you are paying, right? You're paying for the depreciation and the use of the vehicle, not the entire vehicle. Okay, so remember depreciation, it loses value every year. You know, when you buy a used car at a dealership, a lot of them are lease returns. A lot of those used cars are cars that were brand new, they leased it. They actually make money. They make money off of the lease, and then when they sell it to you, they make money again. So it's actually a pretty good, because not everybody can afford new, so they lease it, and then they sell it used, because that more people can afford. Okay. You have the option to buy the car at the end of the lease. Option to buy at the end of lease, but it's expensive. Okay. I will say this right off the bat, right? I won't do it up here. I will do it underneath this box. So let's go down under this box. Anything that gets taxed on a lease, right? Anything that gets taxed on a lease, comma, will be taxed 12%. Sorry about that. Anything that gets taxed 12%. So when it's a lease and I ask you taxes, don't worry about the 7%, the 5%, it's always 12. Anything that gets taxed in a lease is 12%. Okay? So maybe that will help you know what to do when taxes are being applied. Okay? So that's the number one thing that I wanted to know. I'm going back up to my box here. There's usually quite often a down payment, but it's not taxed. Never tax a down payment. And the down payment, you never get that back. That's just gone. Like that's almost like you pay a little bit up front and then you drive it, you come back, but you don't get that down payment. It's not like a security deposit. There may be a security deposit on top of it. If you trash the car, you have a dog in there and it's tears up the leather seats, right? Then they'll take the security deposit as well and may charge you even more depending on how bad the damages are. Lease payment, it's obviously the amount paid per month. And watch this, the lease payment is taxed 12%. How will you know whether or not to apply taxes? Just look for the words before or after tax, right? That's all you do. The term of the lease is the number of years you have the car and make payments. So it's also known as the maturity date. Like a maturity date is like 24 months from now, right? Or something like that. Residual value, think of residue. We talked about that when we talked depreciation, but it's the adjusted price due to depreciation of a vehicle after a lease, the cost to buy the car at the end of the lease. It's usually stated as a percentage, right? And again, this is taxed. So the payment is taxed, but the down payment is not. So the payment and the residual value, if you want to buy it at the end, is taxed. And then there's something called guaranteed residual value. It's very similar, okay? It's the same thing, but it is fixed. It's a fixed dollar amount. Watch this, fixed dollar amount. So the car you lease might be worth 30,000 new, but when the lease is over, it will be worth 18 grand. So 18,000 is the guaranteed residual value in this case. You can expect to pay this amount at the end of the lease in order to own it. You're essentially buying the vehicle you rented, right? You're buying the vehicle you rented. My highlighter is running out of juice. Okay. Mileage cost. This is a big one. This is a big disadvantage of leasing. There's usually a limit as to how many miles you can, kilometers, miles, the same thing, distance. Most lease agreements have a limit on the kilometers you can drive. It's very important to know that. It is usually stated as 10,000 kilometers per year or something like that. So a 3-year lease allows for obviously 60,000 kilometers. What happened there? Mr. Dirksen can't do math. 30,000. Can we change that, please? My bad. The lease agreement will state the cost per kilometer. So if you go over, right, you pay a certain amount per kilometer that you surpass. So let's say you drove 40,000 kilometers at the end of the lease, you're in trouble. You're going to have to pay for those 10,000 you went over. Remember, the mileage is one of the big reasons the car goes down in value. So they want to make up for that loss, right? Watch this. It's also taxed 12%. So how about we do this? And I'm just trying to help you here. I'll put 12% on that, 12% on that, 12% on that, and 12% on that. 0% on the down payment. I hope that helps. Like, so basically everything is taxed when it comes to a lease except for the down payment, and it's always 12%. If you remember that, you're good to go. Okay. Yeah.
For a question, let's say, what you want. Actually, never mind. There might be an example of it.
Okay. No, and please do. Okay, because leasing. If you have a question, ask. I can probably address this because I've seen it all. Right. I've seen every mistake that student make. Probably not all of them, but most of them. Okay. Formulas, which should be on your study sheet. This stuff should be on your study sheet. So go to the back here on page 30. If you want to find out the kilometers past your limit, then you would just go kilometers driven minus the allowance times years, right? So we will do this later on. And then the mileage cost, to figure out how much you would actually have to pay, you take the kilometers you drove past the limit times the rate per kilometers. This is given by the question, And this is only, watch this is only if it says after tax. If it doesn't say after tax, you have to make sure you don't do the times 1.12. So that's that. And I will say this may not always appear in the question. In question. So remember when parts and labor, right? Like the long formula, sometimes lien isn't mentioned, sometimes parts and labor isn't mentioned. So you just don't worry about it. But if it is, right, this kind of deals with the mileage. And then here, total lease cost is your down payment, right? I'll do this again, no tax, right? And then you take your payment times 1.12 times the number of months, 12% tax. And the mileage charge is 12% tax. And I usually do them separately. And okay, so I don't do the long formula for this one because it gets kind of messy. Yeah. Yes, these will be the taxes. Anytime you see one of those, right, that would represent the taxes. Uh, Here, don't double tax. No. So when this would be total lease cost after tax, right? So, but there's no tax on the down payment. Okay, it's like a lien search, right? So it's almost like no taxes. Taxes here. Mileage charge. You know what? It's a bit controversial, but this really is from over here. So I'm going to make an arrow. Because this has already been taxed up here, right? So this is assuming that this amount is going to have taxes already in it. And then total cost, including purchase. So if for whatever reason you need to also purchase it at the end, I will do this. This part right here, write this down. This is the total lease, which we already, right? It's the same thing as up here. So you basically take your total lease and then just add the residual value, right? You know what? I'm going to add times 1.12. It's safe to say here. That's after tax. Just this guy here. So let's put that in brackets there. Let's put this in brackets there. This is already taxed, okay, folks? Would that make sense that this is already taxed? Because we're copying this down here. And there you go. After we do some examples, hopefully this will be a bit, will make a bit more sense. Okay, so I will skip some of the reading part and I will talk a little bit more about that on Friday. Is tomorrow Friday already? Wow. Almost 2 weeks already into the second semester. Time is gonna fly, guys. There are about 80 classes this semester, so we're almost down 10 already. So down to 70 almost, right? Okay. I count every single day, making sure I stay on track. Okay, so let's go through example 1 here, and I'll try to walk you through it. Let's just do this example, and then we'll call it today, okay? A minivan sells for an MSRP. You should remember what that is. That's like a base price, suggested retail of $28,500. Where's my highlighter? There we go. And it leases for $479 plus tax. That should tell you that the $479 still needs taxes to be added, okay? When it says plus tax, it says take this and add taxes to it. And it's a 24-month lease, so it's given in months already. If it's years, just multiply it by 12. A down payment is required, so there's my down payment, very important. And watch this, the guaranteed residual value is 62% of the MSRP. So they give you a whole lot of information. You're not going to need it all every time. It's going to be A, B, C most likely. Okay. So it says here, calculate the total amount paid by the end of the lease. So it's basically saying find the total lease. That's what it's asking you there. Total lease cost. So I'll go total lease. Let's call it TL. And if you look at the formula that I gave you, it's asking for down payment plus, I will label it in a bit, okay? Your payment is $479 times 1.12 because we have to do it, correct? We have to do it. We have to add taxes to it. And how many payments are we making? 24. I just find it easier just having it in months. Okay. Down payment, lease. Is there a mileage charge? Nope, no mileage charge. Formula ends. Okay. So then you just go, this is my down. This is the total payments after tax. And there's no mileage. Okay. I need some of that space, so I'm not filling it up. So this will be 1,500 plus, let's calculate that. 479 times 1.12 times 24. You can do it all in one shot. And it should be a bigger number, right? So that's 12,875.52. And then I will just add the down payment to it once I've calculated it. So now a dollar sign comes in, 14,375.52. No mileage charge. Don't worry about it. Let me zoom in a little bit because some of you are probably having a hard time seeing that. There it is. And let's do B. I promise we'll be done before the bell. Just hang in there, okay? Read carefully. The total residual value, right? Total residual value, and it says after tax. It's right, it says after tax. So watch what we're going to do here. Residual value. I'm going to take the price of the car. Oops, you can't see that. There you go. Let me just move that over. And I'm going to multiply it by what's the residual value here? 62%, right? So you go times 0.62. So 28,500 times 0.62. That's 17,670. That's before tax. I put a dollar sign there. And after tax, all I have to do is take the 17,670 and multiply that by 1.12. And that's 19,790 and 40 cents. So we went times 0.62 to figure out, okay, this is how much you will have to pay to buy it, and we have to add taxes to it. How about we leave it there? We'll continue tomorrow.